Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your hosts Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Monday, March 6th edition of Benzinga's PreMarket Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. On today's show, we've got a couple of drug items to discuss. ADXS and TGTX have some data. We'll also give an update on some ratings for Snapchat, and we're also going to do a segment about how to calculate fair value. That'll all be before our first guest, who's at 8:35. Our only guest of the day, Tommy Lackey, the managing partner and portfolio manager at Relativity Capital Advisors. Joel, how was your weekend?
I was in a fast market the whole weekend.
Okay, great.
I started at 6 in the morning, taking Lisa to the airport on Saturday. Ended cooking my nephew dinner for his 12th birthday, famous Irish spaghetti. And I did something on Sunday that I haven't done in 2 years.
What's that?
I competed in a swim meet.
Oh, how'd you do?
I kicked butt.
All right.
I was. Against guys half my age. And girls half my age.
I had Shake Shack for the first time.
Ever? How was it?
Ever. Overpriced. That's what I'll say.
Best burger ever, though?
No, not even close.
No, not even close.
All right, let's bring in Dennis to hear how he watched the Edmonton-Detroit hockey game, and what an ugly game. That was
and you know how I'm an Oilers fan. You know, I'm Detroit Tigers, I'm Detroit Lions, I'm Detroit Pistons, and then I'm Edmonton Oilers. So I love, actually, the fact that for once in the standings that the Oilers, the first time in 25 years, I think, that the Oilers are actually ahead of the Detroit Red Wings in the standings. I always cheer for the worst teams.
Did you see that
I was loving that game.
Did you see that hit?
Oh, man, yeah.
Yeah, that guy cleared it.
Yeah. Oh, it was the end of a shift, so he hit him right into the bench.
Cheap shot. All right.
All right, we better not talk hockey. We're going to bore everybody here. So, yeah, I could talk hockey for the entire show.
You could talk the entire show anyways, but...
All right, enough. It's Monday morning. Give me a break.
Okay.
Let's go.
Why are the S&Ps just in total disarray here, down 6 points?
Well, and we are off the lows, though. So the buy the dippers were already out here Sunday night here because we were down, 13 points, Joel, at one time?
68.75. Yeah, we were another 7 points lower than here.
Yeah, so the buy the dippers have already come in here over the weekend. I mean, there's a number of reasons here. The Deutsche Bank capital raise did not help the European banks here. Spencer, give us the details what DB had to say. I mean, this was rumored on Friday. I think we've got an official capital raise here now. So Deutsche Bank looks like they are selling some stock.
Yeah, it was rumored Friday. Bloomberg reported about $10.5 billion capital raise actually over the weekend. We got the official number. It'll be around 8 billion euros. So that translates to 687.5 million shares. So that's a big time dilution.
Yeah, and it already got hit Friday. You can see if you look at the chart on Deutsche Bank right there. With about a half an hour to go, the stock goes into free fall. And that's when those rumors broke that there was going to be an additional capital raise. Obviously, somebody had the note before that, too, because the stock was leaking and drifting down all day on Friday. And now we get a continued follow-through here on the official announcement of the capital raise. But just looking here, Deutsche Bank, stock chart, like you were saying, Joel, kind of looked toppy. And now, we're getting hit.
You don't do a capital raise if things are going good, right? I mean, in my
sell high.
Yeah, exactly. I mean, they're jamming it down a shareholder's throat. Just hit 2094, and I was actually looking at this chart before the show, and I had not come across that news. Now you're getting a little dip in the pre-market trading. Probably 20 is going to be a huge number now. But if you just want to and we were going to mention this too, if you want to talk about offerings or a big chunk of stock, what about the people that got long AMD 45 million times at 1370? Big sell. Didn't even trade there, but they got the offering done in the after hours. 1370. I mean, that stock got hit yesterday, recovering in the pre-market, Dennis. But just wanted to just get your comments on that.
Well, I'll give you some props on this for Friday because you were saying on the pre-market show 1370, the offering is like, does that become resistance here now? Because it was trading below that price. And I mean, we opened up at the high on Friday, 1355, not quite up to the 1370, and we went straight down. So obviously, they're looking as, big shareholders selling here. Maybe the other people, want out as well. But it's more profit taking than anything. I mean, this stock has been on an incredible run. We know that, it's been, one of the best performers for the entire year 2016 and one of the better performers, obviously, even in 2017, because the stock started down there at $11, got up to 15.55, and it's just overheated. And this is the same thing that happened with Nvidia. When stock gets the buzz, it gets overdone, and then obviously it's natural, progression to, the shareholders who obviously are short-term traders trading on the momentum. You shake those guys out, you get a little bit of base forming, and then eventually sometimes you can continue the run. So, I would wait for the base here now. Ace making a point here. It has jumped and bounced back pre-market. This thing was really getting hit pre-market. It was down as low as 1261 according to Ace there. I haven't looked at the chart. It's trading actually in the green here now, so we're already kind of seeing a bounce in this one as well. But I think I'd wait to see a couple days, at least a consolidation here before I was jumping in.
All right, and is it possible now, just looking at this, I mean, you could look at it as someone took 45 million shares long. Can you look at it the opposite way? Is that, I mean, that group, I can't pronounce the name, that sold the shares, maybe they went to the clearing firm like a week or two ago and said, hey, I need out of 45 million at 1370, and basically they go out and are selling for all those days and knowing that they have an out there, and then they just swap the stock out, then the customers flatten their
There's some legalities in there, and obviously some things happen in this market that probably aren't completely legal, but I don't know if I think that's happening where they're putting an offering out and then they're going to go front run their own offering. I don't know if that makes sense.
Well, I don't know about front run, but I mean, you have inventory, so I don't know. It's just interesting. Either someone covered a short there or someone went long. I mean, that's the price action.
Could somebody get a sniff, like an order sniffer that there's, going to be an offering? That's a different story.
There you go.
So, in any regard here, we know these offering prices sometimes act like a magnet as that the stock's trading significantly above it. It was just interesting because when that offering was announced, the stock was kind of right there. So, and then, it gets hit hard, but it wasn't a huge offering. So, I don't know how much effect that had more than just the profit taking. That was probably necessary in AMD just because it's been on an incredible run.
All right, great point. Okay, we got some morning movers here, or do you just want to go to your Snap update?
Do we want to go to let's talk Snap here for a few minutes because obviously a lot of people are trading this, and I mean this thing, I can't understand it, and I'm don't use it there. So, but when you talk $28 billion valuations, we talked about it before here. These things can go anywhere off the hop. I mean, valuation doesn't seem to matter with this thing right now. So whether it's worth 28 billion, 35 billion, 20 billion, who knows? When the dust settles is what I'm saying. I don't think it's a $28 billion company, but we've seen companies hold on for a long time. We've seen them go crazier than this. I mean, even Twitter after its IPO was like $30 and ran to 70. So these things, if you're a trader, they're great trading vehicles. I just don't like it as a long-term investment. But what I found was interesting here is there's not a lot of analyst coverage on this yet, but there's gonna be. You're gonna see some analyst coverage coming in here. And what's interesting is the negative sentiment from the coverage who are covering it so far. Spencer was pointing out this morning here that we've got 4 analysts that basically have an equivalent rating of a sell on it, and another 2 that have a hold, and nobody's got a buy on this thing. This morning we get Needham initiating with an underperform, and that's kind of their equivalent to a sell as well. So we've got 2 holds and 4 sells basically on this thing so far, and I don't think I've seen that before on an IPO this early where the analysts are pretty bearish on it.
And what did you say? The underperforms are considered sells at some firms because
some firms don't have a sell rating. Isn't that right, Spencer? Some firms.
No, that's right.
Yeah. So who's got the underperforms on this right now? Or sell rating?
So Needham came out today. We also from last week. Atlantic Equities has the sell. Nomura and Pivotal Research also have sells, and then the holds are from Aegis Capital and Susquehanna Research. So that's the breakdown there. So yeah, not a lot of bullish activity in analyst land.
The analysts are so bearish it almost makes me bullish. There's gonna be a few analysts that come out with buys on this, I would imagine. Because as coverage, after an IPO, you're going to probably see a lot of analysts come in, eventually here with their, commentary here. And I would think there's going to be a few buys out there, but maybe not. It's interesting that everybody's so bearish it already, though.
There will be some buys coming out of the woodworks in the next few days or weeks. I'm sure of it.
And those are firms that did not compete in or participate in the offering. And then what do we got? 90 days before those are, or is it 30 days?
Yeah,
before?
it's the lockup is 90. 30 days is when they're allowed to short.
Okay.
And so shorting is allowed as of Friday. If you were a retail investor, you could short Snapchat if you. I know E-Trade had it in their hard to borrow program, which it's a hard stock to borrow. So if you meet certain requirements, you could short it. The big firms like the underwriters, the Goldman, Morgan Stanley, Bank of America, J.P. Morgan, Deutsche Bank, Barclays, Credit Suisse, they can't short.
They're all handcuffed.
Right, they can't short for a month.
29.
Joel, what do you think on the technicals here? We had a huge run on Friday, 26 to 29, impressive move, and then we gave it back. Now we're just kind of hanging out. We're actually still trading higher on the day, which is interesting because we get, the only analysts coming out today need them with an underperform. You think that might put some pressure on it, but no, they're shrugging that off. It's already traded 1 million shares. I mean, this thing is a wild child here. Just technically, we have 2 days here. What are your thoughts?
We backed off that 29.44 high, almost closed $2.50 lower. So now I think you do got a little bit of people stuck on this one. So I think you'll find sellers ahead of that 29.44. I know Nick called for 31 the second day, didn't quite get there. So I'll be looking at that 29.44, see if people are willing to step out ahead of that. And then the close, 27.09, the old-time closing high that's called $27. Could see some profit taking if you get under that close at 27.09.
Also, Snapchat did get some negative ink in Barron's over the weekend, so count
what
that.
did it say?
Count that as another.
What Barron's
if
say?
you want to count that as a rating. Why? I think the headline was Snap's stock price could be cut in half.
Yep. It was.
So
It was.
I mean that says
that's
all.
reminding me of Facebook.
Yeah, well, they said
Barron's
that about
came out
Twitter
negative.
too.
That was the bottom.
Yeah, they're pretty good at highlighting their, some of their good calls. Their bad calls, they do come back and they do touch on it. One thing I did read in that article is they're valued more than CBS right now. So, huge valuations,
Wow.
not a lot of stocks coming out. Hunger for these new, IPOs. Maybe the millennials are out there buying it, but I guess until I get on the platform and figure out to use it, I'll reserve judgment.
I would say I'm in a couple of Facebook groups about like trading groups on Facebook, just for people to talk about trading, and pretty much every day for the past 2 weeks or so, it's been who's gonna buy Snap or who's buying Snap, and you get this. It's pretty much split in half. You get half of the responses are like, oh my, yes, absolutely, I'm buying this thing as soon as I possibly can, and the other half is like, no way, never, never. So.
Well, Joel, this is a great point that Barron's is bringing up here, with the valuation issue. And, you talk valuation, but this is what I don't understand for all social media. Not talking about Facebook, because Facebook has like, they almost feel like they have the monopoly on, maybe Snap's got the chat going part, but, Facebook's got a lot of things figured out, correctly. But just looking at, like a Twitter, this is the same reason why I don't want to own Twitter in my investment portfolio, even 11 billion, is because when you compare it, if you compare it to Facebook, it doesn't look bad. But when you compare it to traditional media companies, and these are social media companies, and this is going to be the new medium of advertising there, you start comparing it to the older media companies like a CBS, like a Viacom, you start to say, is this, here's a company like CBS that actually makes pretty good money. They've got a lot of, different ways to advertise that are in your face. And here's a company that's trying to figure it all out. And this company is worth more than CBS. I mean, when you compare these companies to traditional media company valuations, it's really scary. I mean, these valuations here on something like Snap. And, and you can't even figure out a valuation thing for it because it doesn't make money. So it's difficult to just say I'm going to put $28 billion and buy Snap a $28 billion market cap when it's more than CBS.
Yeah, I mean, there's just not much out there. I mean, we talked to this about, coming to the market. So if you're,
great point too.
Yeah.
This is and Spencer, you brought this point up here on the pre-market show, and just enlighten us just that point you made there again, because I don't want to get it wrong.
Well,
what were you saying about IPOs? There's just not a lot of them out there.
There just aren't a lot of mature IPOs, and that sounds like a silly thing, or to say to call a startup like say a mature startup, but there just aren't a lot of mature startups out there that are IPOing. I mean, we have a couple this year. Dropbox could potentially IPO. That's a pretty mature company, but again, a lot of their services are free offering, right? They offer the free cloud storage to a lot of people. That's a lot of what they do. But they're an example of a mature company that could IPO. I mean, Uber at this point is 5 years old. Lyft is 5 years old. But there just aren't a lot of companies. And you're saying, Dennis, like during the dot-com bubble, we were getting the IPOs every other day. We're not getting that right now. So, supply and demand, right?
Yeah, and that's a great point. You can see these valuations probably get a little bit crazy on some of these because there just isn't a lot. If you're a trader here that loves to trade IPOs and you want to get in there, there's not a lot of options for you. I mean, there's not like we're getting a new IPOs every single day. Back in 1999, everything was going IPO, and you had 2, 3, 4 companies some on the same day sometimes going and coming public there, and so there was a lot of different options there if you were an IPO trader. And valuations got crazy on everything back in 1999. But on some of these stocks, it kind of feels like that, and overall market doesn't feel like that at all because the valuation of the overall market is nothing like it was in 1999 when Walmart has a PE of 50. But when you talk something like this and you see little, like a snapshot, these valuations are scary for me. And I know in 1999 and even 1998, 1997 going before that, it can last for a long time. The buzz can continue for a long time, and valuations can get even more crazy. And when you don't make any money, it's hard to even figure out, how to value this company there. So is it worth 28 billion? Is it worth 50 billion? Is it worth 5 billion? I can't value it when it doesn't make any money. So, and I don't know when it's going to be profitable. So, or if it's going to be profitable. So I'm just out on that. From my investment standpoint, as a trade, it's a different story. But from an investing standpoint, I always look to valuation first. Does it make sense? Do I understand the company? And, is there, a direct route to profitability here that I can envision? I can't do that for Snap. And that's why I'm not interested in investing in it.
We have a question in from the chat. Who was it? Somebody brought up Kroger. Oh yeah, that was Game Clocks. So Kroger, I mean, I know they had earnings. What was it, last week?
They got hit hard.
Right, they had earnings on
I
on
think
Thursday.
it was Friday.
Thursday they had earnings.
Oh, Thursday.
Yeah.
Thursday night?
Yeah, nope. Try again. Thursday before
it was
the
Thursday morning, and
yeah.
then it got hit harder. So why did it get hit harder on Friday? Because it got hit Thursday.
I mean, it got a Goldman downgrade.
Oh, that was it. I knew there was something on Friday. So Goldman, they downgrade something, and you get continued pressure and stuff too. People listen to Goldman, whether you like them or not. They are definitely, I think, the most influential BD on the street. So when they come out and say something, the street listens, and they hit Kroger really hard. And this morning, just coincidentally, they were actually hitting GoPro here because Goldman downgraded GoPro to sell this morning. So we'll go to that in a second, but just give some quick technicals there, Joel, on Kroger.
Kroger, going back just in the middle of February, was nearly a $35 stock, now under 30. Just giving you one level to keep an eye on. Lower the move, 28.71. I guess if you're trying this for a swing or intermediate trade, that's your stop out. If you're looking to buy it on the cheap here, 29, nice round number, down to 28.71. But just count the down days there. Wait for a double bottom, triple bottom, or something. But I guess we could just go the Amazon effect here.
I'm scared of telling this just exact reason.
Yep.
If Amazon's going to start to get serious about delivering groceries and figuring it all out, I mean, I don't want to fight with them, and Kroger's directly going to be fighting with them. So I'm out on Kroger for that reason.
I did go there and spend $110 on Sunday, and then the person didn't ask me for my Kroger card, and I'm like, well, what's the deal here? And they always ask you. Then they said I had to go wait in line at the customer service, and I got $8 back. So
I told you, yeah, that's the one thing I don't like about Kroger. If you don't have the Kroger card or forget to give the Kroger card, you don't get the discounts.
Yeah, but I
they
did.
They say this is on sale, but they don't give you the sale prices unless you got the Kroger card.
All right, Fuzzy's asked twice here about this Title 111 regulation, and I believe it. I don't have a lot of information on it. It's something related to crowdfunding. Dennis, have you run across this?
Well, throw me under the bus on this one.
Sorry.
I have no idea.
Well,
Title 111 regulation. So what do you? So Fuzzy, just enlighten us a little bit further. What is that pertaining to, first of all? And then we can, maybe jump into that in a second there.
It's part of the Jobs Act, and it's not 111. I think it's triple I.
Oh, that's why Dennis didn't know it.
No, I believe it's part of the Jobs Act. I don't have a lot of information. I can look something up for you real fast, but
I don't know much about crowdfunding. I'm an equities trader. Crowdfunding
Sorry,
is that
Dennis. You always get
so
mad at me when
so
I
Joe
do
likes to
that.
throw me under the bus on that one. So crowdfunding is something I know a little. I understand what it is, but I can't tell you much about that. When you start to get into different types of regulatory stuff with crowdfunding, I have no idea.
Okay, just put it this way: Obama put it in. Trump's going to take it out. Let's move on.
Trump's taking everything out, isn't he?
All right,
Yeah.
spit.
Let's not get into Trump here this morning. I can't get
No,
started
no,
at
no. I'm
20
not in the mood.
Monday
I'm not
morning
in the
on
mood.
Trump. So let's
well,
jump over here. A
b-
few other stocks that are in the news that are
yeah.
moving here this morning.
Well,
Now where was it?
we have some drug data. A
Yeah,
couple of stocks are moving this morning. ADXS moving this morning. Advaxis, they had FDA acceptance of IND, and they're planning to initiate phase 1 trial in 2017. That was one. The other one was TGTX, also moving this morning. That's TG Therapeutics. They had their phase 3 genuine study met the primary endpoint of their drug TG1101. It was well tolerated with a consistent safety profile. So two positive data points there.
Uh,
ADXS. Wow, this is breakout city here. This is consolidated forever under $9.50, and now boom, we go up to $10 here pre-market there. That's an interesting setup, Joel.
all right, I'll give you the pre-market high. Pre-market high is 1045. You backed off there a little bit, but if you can plow through there, 1088. That was your high in November. Coming back on the downside, you get a pop like this. You never want to see something go red on the day. And then TGTX rallying off good drug news as well. This
Their
one,
big mover of the day,
yeah,
number one on the
yeah,
leaderboard.
this is a reverse split candidate here, as the stock was over $400 back in June of
Wow.
2009. So who knows where this? All I could say on this one from the pre-market trading is someone has an opinion here. 955, 960. That's held up for a couple different brackets. So if you're looking to follow through TGTX, see if you can take out that pre-market high of 960.
Just quickly here, I just want to mention General Motors been bouncing around here this morning, and they have officially sold their those European cars to Peugeot. Is that how you say it?
Opal is what it is.
Oh,
Okay. So they've sold.
They sold Opal. Opal is the GM, the formerly
Okay.
GM brand that is being sold to PSA.
And it was popping up this morning on this news, and now it's given it all back and is actually trading red. So that's interesting in itself. Big volume here on General Motors already. 170,000 shares have traded. So that is some massive volume here for GM this early in the morning. Usually you'll see a few thousand shares only trade. So they're moving it on this. I mean, it got the big pop up, and now it's well, not the big pop up, but it got popped up nicely here pre-market, and now it's giving it all back. Joel, technical thoughts here, General Motors.
I've been keeping my eye on this one, waiting for a breakout above 38. 38.38 was your high in mid-January. You bested that by 7 cents on Friday at 38.45. So 38.50, give me three closes over there. Then, maybe you get a breakout to the upside here. But trading range for GM, which has just persisted since its IPO here, 40, 30 to 40, well, 20 to 40 as well. Near the up of the range, just can't seem to clear that 38.50.
You always talk about closing over a level, Joel. Just explain why that is relevant because, a lot of traders will look at something, and I agree with you. I think, when you get the close over that level, it's more relevant than if it just, sneaks its head above it and then, closes below that level again. Why do you need the close over, 38.50?
I mean, it's just with systems, trend following systems will pick up on a close. You can hit these prices during the day. You can trade a high area, but very little volume there. But if you actually close there, that means there's sustained liquidity. Not only there's sellers, but there's buyers, and it just gives an inclination that the sellers have stepped up or the buyers have stepped up the price is holding. Then your short-term trend followers, your medium-term trend followers, it's just kind of a cachet effect. Whereas if you just hit 38.45 here, bounce up, never really get the solid closes over 38, it's not going to have the same kind of momentum.
There's some technical strategies that are just based on the
On the
close,
close.
though, as well, correctly. And then, if you're looking at those technical strategies, wouldn't those, have more obviously relevance when you get the close above it?
A lot of systems buy on open, sell on close, right? As you know
Yeah,
from trading at Bright. So it's to me it's just sustainability of a price. Just like when you talk about taking out a tractor beam. If there's a big seller at 13 even in a stock, it closes at 12.30 the previous day. It rallies 70 cents to get there. Not as good chance of taking it out. If it settles at 12.85, 12.90, boom, the
running
volumes are
start
going
at
to
it.
trade. Yeah, it has a running start at it. So kind of the same concept here. But 825, Dennison, you got another question from one of your thousands of Twitter followers. What was that?
Well, I guess 6,000 Twitter followers, so not that many. But Tim, and he gave us a good question last week. He was asking us about imbalances there and just how to trade them. And he's got a follow-up question here. There, he's asking, how do you calculate fair value? This is something I've explained on the show a long time ago. I've explained a long time, so I think it's a good time to maybe jump into a 5-minute segment just on, when I talk fair value on the show, what am I talking about? So, Bright, and this is again from Don Bright, who taught me, and Don Bright passed away a couple of years ago, but he's left a lot of traders with a lot of good strategies before he passed away. And Don Bright employed, what we would call like the opening fair value strategy, where he would look at the stocks and say, okay, well, if the S&P futures are trading up 1%, stocks that are made up of the S&P 500 futures, other things being equal, if they don't have news, will probably be following the S&P because obviously the 500 components have to make up, what is happening in the S&P. You'll have some stocks that are down, some stocks that are up, but overall, you start to look at, betas then, and you look at, how closely is a stock correlated with the S&P futures itself. And a stock like General Electric is a great example because its correlation with the S&P futures is very, very high. And as you have more technical trading systems, as you have more high frequency arbitrage, statistical arbitrage systems, you see these correlations even get closer and closer. So just for example, if you look at GE this morning, it's trading down 0.23%. The market is trading down 0.3%. I mean, that's holding very well with what you might think fair value because GE is very closely related to the market and its correlation is very high. So when the market is up 1%, GE typically will be up about 1% if there's no news on it. I mean, if there's news on it, I'm out. So, the first thing when I'm doing a fair value strategy is I'm looking, and there's stocks I like to trade. The best ones are the top S&P components. Now, you can't consider the oils, ExxonMobil, Chevron. Those kind of move more with the price of oil, obviously. But General Electric is a good candidate for a fair value trade, and I do it all the time. So if the market's trading down like 0.3% today, and GE was to, let's say, open up, well, I might try to short that, thinking it's going to come back and short that and buy the actual S&P 500 futures against it, or the SPY you could do against it. And then you're trying to just grab that relation, that difference between, where the GE opened and where, the SPY is currently trading. And why, sometimes the stock opened too high or too low? Well, it's all still just supply and demand. And sometimes you'll have a big buyer off the open, maybe in GE, that'll push the price a little bit too high. Or maybe you have a huge seller that's going to push the price a little bit too low. So the basic fair value trade would be to surround where you deem the fair value. So, for example, and this is just GE, it's so related to the market, it's a good example though. So let's just say, hypothetically, SPY was trading down 1%. If GE opened down 1.5%, I would maybe buy GE at the open. If GE opened down only 0.5%, I would maybe sell short GE at the open and then do the SPY against it, looking to grab that 0.5%. So, that's the basic idea behind the fair value trade. And then Don Bright would employ, and he use obviously algorithms to do it as well. And he would, send in, on sometimes, 200-300 different stocks. So you're basically buying stocks that are opening too low, selling short stocks that are opening a little bit too high relative to where you've deemed the fair value. And you have to consider beta in there, obviously, too. Right now, the financials have a higher beta than the market. So on any given day, if the market's down 0.3%, usually your financials will be down a little bit more. So you've got to consider what the betas are. If it's got a beta of 2, twice the market, then it's probably should open down twice as much as the market. Again, if there's news on it, you got to take those stocks and throw those stocks completely out, though, because if a stock's upgraded, it's probably going to open up. It doesn't matter what the news or what the overall market does. So usually when I'm playing fair value, I'm playing stocks without news. If you miss news, sometimes that can get ugly too. But that's the basic idea behind the fair value trade. A lot of traders have deviations of it. They trade it in different ways. That's kind of how I've traded it, and that's kind of how Don Bright taught us to trade it.
Can you talk a little bit about the guts, behind it, the actual calculations, the cost of carry isn't much, but a little bit of the math behind it?
I mean, and that's talking, and there's a difference if you're talking fair value of the S&P cash versus where the futures are trading. You can figure out, the premium and the discount. I mean, it's a little easier now with, now and I'm talking fair value on the equities, and if you're talking fair value on the S&P futures against the cash, that's a different story altogether. Like you'll see on CNBC, they'll talk fair value, and they're just looking at where the cash was relative to the futures. That's a different type of fair value. So that's, the fair value of the S&P futures relative to the cash. So where I'm talking the actual equities there, so I don't have to figure out with dividends and all the other stuff that you would figure out in a fair value calculation of where the cash should be relative to the S&P futures. So I don't have to figure out any of that stuff with the stocks.
All right, we got 5 minutes before we bring on Tommy Lackey here. We do have some analyst
Well, let's
moves.
talk those imbalances just for a second here, because this is what can throw out stocks, relative to, fair value. And that's one of the biggest things I think that, a stock will open too high or too low because it's got a big buy imbalance or a big sell imbalance there. So that's why we always give this information at 8:30 in the morning here on the pre-market show, just to kind of give, you traders a little more information on, some specific stocks. And for instance, here this morning, I'm seeing Pepsi with a big sell imbalance of 69,000 shares. Maybe that opens up a little bit too low and gives you an opportunity. GE, which we were just talking about, has a sell imbalance of 121,000 shares. Somewhat significant, and a couple people just hit that stock down to 30.03, probably on that imbalance data there. Overall, though, pretty quiet. Colgate, which is one that's been kind of wild as of late, had the big run up there, and then it's just been oscillating, just kind of trading. There was rumors here that somebody might be sniffing around in it before. It's got 56,000 to sell here this morning, so that's significant. Also, Cisco SYY has a sell and balance of 61,000 shares. Sometimes I like to look at trends and see, does this look sector related? Is there a lot of stocks that are similar that are getting hit here this morning? You're kind of seeing that a little bit with some of the more defensive stocks looking like Colgate, Cisco. You could put Pepsi in that group, having a few sell imbalances this morning. So maybe it's a big institution that's just lightening up in that sector. We don't know, who's behind this. All we know is that at this time, if the stocks were to open right now, those stocks would open down.
And do you take any technical analysis into account there? If
Yeah,
if there's
this is all just tools in your toolbox, right? So fair value is one tool that I use in my toolbox in figuring it all out. But I like to look at the charts. I like to look at a daily chart. I'm not a big fan of intraday charting, and I just it's not something, a tick chart, stuff like that. It's too short term. What I usually like to do, the first chart I look at when I'm analyzing any type of stock is usually the daily chart. I want to know what it's done here over the course of the last week. I want to know what's done over the course of the last month. And and then it gives me a feel for, hey, has buyers been coming into this stock over the course of the last few weeks, or has sellers been coming into the stock over the course of the last few weeks? So it gives me a feel for what the order flow has kind of been like. That's basically the first step that I do. And then obviously you jump into a lot of different things. But I mean, if a stock has had continued selling pressure over the course of the last week, well, I might be a little bit less apt to buy that stock on a fair value trade because it's already been weak. So if it's relatively weak coming in, like a great example might be a stock like AMD. And I don't know if AMD is really a candidate for a good fair value trade because it's a wild child and it kind of does its own thing. But you look, it's been weak, weak, weak. I mean, there's a lot of money just flying around all over the place in AMD. So I don't know if fair value matters on a stock like this right now. At least not right now because it's just too volatile. So, by looking at the chart, I can say, hey, this stock has been pretty wild here lately. Fair value probably isn't something that's really anybody's considering on this thing because it's been so wild. And if you look here this morning, you'd say, whoa, AMD's trading up on the day. I'm going to sell short relative to fair value. That doesn't make any sense because the stock was 15 and a half 3 days ago. Now it's, it got down at 12.61 the pre-market. It's just wild. It's still trading and trying to find its home. It's still kind of a little bit in its own little price discovery right now. It's trying to refigure out where it is. That's not a stock I'm interested in from a fair value play because it's too choppy and it's still trying to figure out where it wants to be. I want the stock that's more stable, that has figured out where it wants to be and is now trading probably specifically on what the S&P futures are doing. AMD is going to do what it wants to do. It doesn't even care that much about what the S&P futures are doing. And that's, this morning you can see that stock's trading up 1.5%. S&P futures are trading down 0.3%.
And what about Xerox? It has a buying balance of 139K. That's significant. Like the only reason about this one, Dr. J, I don't know if you read your Barron's over the weekend, Positive ink and
There
Barons.
you go.
Yep. So there, I got to go out and buy Xerox on the open. Dennis, I don't know if you would classify that as substantive news, it being in Barron's that
Yeah,
you would
I
move.
would. If
Okay.
there's a positive ink in Barron's, that is just like news. That is positive news for Barron's, and the stock is probably going to open up, and that's why you're seeing it trade up 2.85%. So I would totally classify that as news and would not trade that. I would pull that from any algorithm that was trading off of fair value. I would pull that stock out and not
Great
trade that stock
example.
this morning because there's positive ink in Barron's, and fair value doesn't matter to the stock this morning. What matters is the individual company news of being, promoted in Barron's.
All right, pre-market high stands at 7.62. Recent high of the move 769. So that imbalance is opening into a little bit of resistance. Yeah, Range Resources, that was in Barron's too. Very positive article regarding natural gas prices being depressed and them being a low cost producer here. So that's getting to pop up to 28.32. I would not be touching the buying balance in that one as you're getting quite a bit up here. And that stock's just coming off the lows of the move. All right, Spencer, what do we got here at 8:35?
We got our usual Monday guest. That's Tommy Lackey of Relativity Capital Advisors. He's the managing partner and portfolio manager. So we'll be right back with our guy Tommy.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Alcana, along with Dennis Dick and Spencer Israel working the boards. We have Tommy Lackey on the line of Relativity Capital Advisors. Tommy, how you doing on this Monday morning?
Doing great. How's everybody doing there?
We're doing good here. A little bit of a cloudy, rainy day in the Motor City, but back to the markets here on Monday, and S&P futures hit 2401. That was on Tuesday here. They looking a little tired, but the sellers haven't taken control yet. Give us your opinion on the overall market.
Yeah, basically, I mean, we obviously could have and are due for some type of a rest / pullback, depending on what time frames you're looking at and things of that sort. But we really have no good evidence in the charts or in the numbers that are showing it starting yet. The breadth has not really rolled over a whole lot. It's waffling a little bit here. And the charts themselves are not really, like I said, the sellers just really aren't taking hold when they have a shot. So I think we could, bounce around here a bit, but this thing could keep moving because there's no, we haven't had a large catalyst or a large set of sellers come in yet, pretty much all year.
And I like your comment here. You've wasted too much time over my career trying to call the top. So that's
Yeah, I mean,
comment
there's
on that.
just no real reason and I've never seen anybody really do a lot and make a lot of money doing it. And honestly, if you really want to call a top or a bottom, you're much smarter calling a bottom because they tend to be much sharper than tops. It's just a different emotional state. So if you're going to choose one side or the other, choose a bottom, but you're better off just trying to get some meat in the middle and keep moving.
Trend is your friend. So let's go right to the nitrous scan here and a nice single digit D. I believe that's Dominion Resources. What are you seeing on the charts?
Yeah, I mean, utilities have started to come back and kind of pop back up. And with Dominion, looking at this chart, it looks like it's trying to move up towards the top or above this consolidation it's been in for a good while. And then it's got another high in the low, probably 70 or high 70s, around 79, that it would have to clear. But from a utility standpoint, it tends to be one that seems to be standing out more on the top side, and it's got decent volume. Now, the thing that I put there beside it is it's rate sensitive. So if people do start really pricing in, we're hearing that the odds are real high for a rate hike now. but the more they start pricing in, the more that's going to make it difficult for utilities as well. So this is kind of a look both ways play. You got to either make it move under, at this point, probably 75.30, or move over about 78 before there's a play in here.
I think the only thing that could derail the next rate hike is a really bad February jobs number, but there seems to be a 90% consensus that we're going to get a little quarter-point bump here at the Fed's next meeting.
But that's up from like 20% a week ago. So I just wonder, when it moves that fast, where are we? But I guess we're so close, being a week out, that, things are starting to solidify.
Excellent point here. Now here's a juicy looking chart, and makes you hungry. J&J Snack Foods Corporation.com. What kind of snack foods do they sell?
I don't have any idea. In fact, I had never seen this ticker before this weekend. But you got to look at this chart and say, wow, I mean, it's got a really nice daily 2.5, almost 3 month base now. It's right at the top of it. And you look over on the weekly chart, and that little base was just kind of a back test of its previous cup and handle breakout. Very clean looking pattern. So I think you could still have some movement here, especially if it can get over this 135 area.
All right. It looks like soft pretzels, frozen novelties, frozen beverages, baked goods, all that stuff that's not good for you. But
well, it's also nice to have a ticker like this that nobody knows. The fact that we don't know what it does, to me, is somewhat an advantage, because everybody's eyeballs aren't on it.
All right, keep it on here. Wage digesting the breakout above a huge level. What are you looking at in WAGE?
Yeah, Wage had a big breakout last week, or a week and a half ago, I guess, and it just started to kind of work its way back into the middle of that, and it looks like it's trying to hold the – I watch channels. I watch Bollinger Bands, which a lot of people do, but then I also put another set at 1 standard deviation versus 2, which is a normal Bollinger Band. When you start seeing stocks trend up in between that 1 standard deviation and 2 standard deviation, that's often a very good trending sign, kind of a sweet spot type scenario that I learned from some other individuals, and it really does. It's worth watching. So this one's staying up in that channel at this point.
All right, then auto parts bunching up under highs. Gentex, GNTX. What are the charts telling you?
Again, another name that you don't hear a lot about, not a lot of people know, but it looks like it moved higher and then gapped down maybe on earnings, I believe it was, a little over a month ago. And then it just held that base and has worked its way back up to these highs. So, working sideways here for a few days and seeing if it can break over that 2170-ish level gives you a good mark to be paying attention to for a further breakout here.
All right, WLH. You're definitely the obscure stocks today with Tommy. I can't even tell you what this one is. WLH.
This is actually a home builder. It's William Lyons Homes, which home builders have started to work their way out as well. And this one looks like it's been kind of lagging. It gapped out last week, and then it closed that gap on Friday, but held the EMA and hammered up. This one's also in that 1 to 2 standard deviation band in the daily chart, and the Bollinger Bands are opening up. So I think if this one can get over Friday's high, it's worth a swing trade here and see if it can move over the 1980 to 20 area.
And a little gap fill almost on Friday. Missed it by 2 cents, 1877. You're high in the 28th, 1879. You're low on Friday, so kind of like that, filling the gap from news. Moving on here, a small biotech, SGML.
Yeah, SGML, the only thing I don't like about it is being I guess it's a $3 stock, I think it is, $4 to $5 stock at this point. But you look at this thing, and it's got a really nice base that it's working its way out of on the daily, kind of an inverse head and shoulders look there. And then if you back out on the weekly, you can see that this area right here that it's working on, if it can get back over right around that 5 area, a little bit higher, that area that it's working on was support back in 2015, early 16. And so it's something you definitely want to pay attention to there as well, because that could be your reversal trade.
Downward dog is wants your opinion on VWV wild range on Wednesday, matching ranges on Thursday or Friday. So I'd be tempted to see if you get a breakout above 44 or break down to that double bottom at the 43.70 area.
Yeah, I mean, I think both those actually, I would probably be down to 42.70 for me, and then over about 45. But I've been looking at this one. I think the big range candle was a very important candle because of the fact that it tried to break down a few different ways you could look at it. It tried to break down the daily angled trend line or uptrend line. It tried to break that range, two different ranges, as a matter of fact, and then it worked its way almost back above, in fact, back above all of it. So I think, again, you get back above 45 here, I would favor this one up to test those highs around 48.
All right, let's do one more here. Burlington Coat Factory. Holy smokes, that thing had the earnings report. I don't know, Tommy. Teach me how to buy this one. Breakout mode, trading
Well, I was
down.
about to say, I'm glad you brought this one up because this one is not one you can buy right here today. I mean, it'd be very difficult, especially with the tail up there and all that, but I don't think I'd want to short it either. So this one goes on a back test. And, you look at that 90 area, good round number, roughly where it broke out. It comes back around that area, and I would actually probably give it a little bit lower to around 89 to 88.50 to 89. Let it come back down to that area and see what kind of happens there. If it can hold, I think this one's a buy and continues to move because retail's been pretty heavily out of favor, yet this one has continued to perform well. And if we see any life coming back in retail at all, this one's going to be a leader because it's already there.
Tommy, let's jump over to your meltdown scanner there, and we one right at the top of the meltdown scanner, finish line FINL. What are you seeing in this one?
Finish line is basically the opposite of Foot Locker. I mean, you have the other one, the FL, that has been performing pretty well, trying to come back and getting some call. And so this one's down here at the bottom. However, it's in a situation to where at this point, it looks like it could be starting to look for a failed breakdown if it can make its way back above here. It basically, to me, would have to get back above about 1730, 1740, and you've got a good failed breakdown here that you have the potential to work its way back up, as well as you've got some pretty heavy weekly volume support in this area going back almost a year and a half.
CF Industries, ticker symbol CF. Now this one's interesting. This one, it's just sitting there and hanging where it hung there a couple days last week. If it takes out that 30.5, look up below.
Yeah, and that's something that's exactly what I was looking at this chart for. But then I started looking back, and as I started looking back on the daily, I looked at this as also an area it kind of broke through. So I think in this 30 area, I'd be watching it real close either way. And right at 30, you have your 100-day moving average that sits there that it has held as support previously as well. And so I would be watching that 30 area, even if it does break. It doesn't mean you can't short that break. It just means you got to be cautious that this could be quick or could catch some support there just because of the way that whole side of the industry is playing, and we started to see a little better options action in some of the other fertilizers last week.
Lazy Boy got hit on its earnings report from 29 and change down to under $26. It's bounced back the last 4 or 5 days, closed at 27.15. What are you seeing in LZB?
The thing I didn't like about this one is the way back it came back up underneath the 200 SMA and the 8 EMA. 200 SMAs, your long-term players, your 8 EMA is going to be your traders. Came back under both of those, and on pretty weak volume, can't get over it. And so it looks to me like you got a chance that if it breaks below Thursday's low or even Tuesday's close right there before the gap up, if it breaks back below that, I think this goes back to test the lows and could continue lower.
Your buddy Rob Hood there, LOPE, he wants to know about, it's an education play, Grand Canyon education there, and this one's been a wild child. What do you see in the technicals in LOPE?
I mean, you don't necessarily see anything bad, but I don't really know how you get on this one right here. If you're already on it, you just keep riding and take out that black that black candle or red candle, however you have it on yours. But if you're not on it yet, I think you just got to kind of watch at this point, because if you didn't get the breakout, you certainly should have gotten that curl when it held the gap. But here you're too far into it.
Another one coming from Downward Dog, HABT, Habit Restaurants. This thing gapped up big time on Friday, but then gave a lot of it back. HABT.
It gave a lot of it back, but this area right here has a cluster of the 50-day, 100-day, 150-day, and 200-day, all between 1511 and 1550. So that's the area I'd be watching and seeing. If it gets below 15, it's probably going to head back down towards closing that gap. If it can hold over the 15 to 1511 area for the most part, I mean, a quick 5-10 minute move under it's not a big deal. But if it can hold over that for the most part, it may try to hold these MAs and work sideways for a while before trying to take another shot.
And Tommy, Pinewood Derby, was that over last week or over the weekend?
Yes.
How'd you do?
Yes, my son won second place in the speed competition, so he goes to district, and my younger son got the whole what do they call it? I don't think it's really a participation trophy, but I guess it was showmanship or something of that sort, and so it was a neat weekend for him.
I did that back in the Cub Scout days. The first year, my dad and I did it solo. Got no help from anybody. We won the pack and top 3 at the counties. The next year, we got advice from people. We did worse. And the third year, we got more advice, and we didn't even place. So stick with your own thoughts on that one, Tommy. Thanks a lot. Tommy Lackey of Relativity Capital Advisors, giving us a technical outlook, buys and sells in the market. Thanks, Tommy.
Thanks, Tommy.
Thanks, guys. Y'all have a great week.
All right, NOK's coming up here again. I think it did get a little positive. Inc. and Barron's, Nokia, the forgotten stock here. Dennis, any thoughts on Nokia?
Nokia was positively mentioned in Barron's, you said?
Yeah, I can't remember.
Yeah,
Nokia
and its peers are set to thrive, is what I think the headline was there.
It's trading up slightly here on the pre-market. I mean, it's an ADR, so obviously it's trading off of where it's trading overseas as opposed to really where it's trading here this morning. But this stock's just been marching. I mean, this is a trend. Like Jeff Mack used to say on CNBC, take your purple crayon, draw a line there. I mean, as long as it's above that line, I guess you're okay. Starts taking out that line, I don't want any part of it.
All right, gap, going back into a gap area, a lot of that could be attributed to being an ADR, but you could just see the levels, 540, 560, 580, and $6 was the high back in June of last year.
Just wanted to touch back in. I talked fair value right before we had Tommy, and it's just one other thing there. You were mentioning about, the futures there, and I had, Jamie from Bright, same thing, just saying, the futures versus the cash. Because years ago, how we used to calculate fair value, we had the S&P futures was the only liquid product, really, when we were looking in the pre-market. So we had to look to the S&P futures and then figure out where it is relative to the cash, because the close on the S&P futures was 415, the cash close was 4 o'clock. So you had to always do that calculation. The nice thing about it now is if you're trading the equities, you don't have to worry about any of that. And the reason there, which I didn't clarify before, is that I use the SPY now. I have the SPY as a liquid product, as a 1 cent market in the pre-market, and its close is 4 o'clock, which is the same as the equities. So I can simply use the SPY as my indicator for where the overall S&P is trading there, as opposed to, having to go to the S&P futures itself. So that's the nice thing about having the SPY, is I don't have to figure out where the fair value is and do the interest and do the dividends, and calculate it where it is to cash, because I simply have the SPY. The one thing, though, is just remember the 4 times a year that the SPY goes ex-dividend. So obviously you'd have to adjust for the ex-dividend when you're figuring out on those days where fair value is.
All right, 8:53. Looking on our sheet here, did we cover all of our movers that we had on the top of the show?
We haven't got to any of the upgrades and downgrades.
Let's do it.
Yeah, let's go into them. So we did mention here, but I want to do a technical on it. GoPro. GoPro does get the downgrade today. I think this is the second day in a row that it's getting a downgrade to sell. I don't remember who it was Friday. Goldfish memory. Joel's a good memory. Maybe he'll remember who it was on Friday that downgraded to sell. Actually, I have it written down on my sheet. Citi downgraded on Friday to sell. Goldman comes out here today and downgrades it to sell. So you're seeing follow-through selling pressure here again. GPRO is flirting right with some significant levels here, Joel.
844, that's your pre-market low. What's the all-time low here looking on this issue?
Get close.
Oh, 854. Oh, boy, this could be
We're taking it out in the pre-market, and this has been a level. You go to your weekly charts, Joel. How many times we were down here in this 850 level, we bounced. one of these times it ain't gonna bounce.
All right, you're taking a look at that. You can go longer term as well. I mean, it's a camera company, Dennis. You remember a big Dow component, Eastman Kodak here? Camera companies, and now you got Snapchat not making any predictions here, but just a long base here at not getting away. I mean, how much cash do they have in the books? Would be
I
my
mean, that's
question.
what you start considering here too. You need to look at stuff like that. And, I think they did have some cash, but the problem is they're burning cash now. They were making money before. In the last couple of quarters, they were losing money here. So you start burning cash here, where is their cash? I think at one time they had $4 or $5. Not sure if they dug into that a little bit because they were burning cash here, but it's a company that the buzz is over on now. And it's scary here from an, investment standpoint now because, you can say, okay, well, looks like value, but, it was a value trap for 20, 15, 10. Now it's starting to look, still like a value trap here. And if it starts losing money every quarter, then, valuation goes out the window.
B. Riley downgrades Procter and Gamble to neutral, lowers the price target to 91. Whew. Dennis, what an interesting chart here on the dailies. Now, if you would
Yeah.
have fought this thing, who was a big buyer in that thing? They bought like 1 trillion shares. Was it Nelson Peltz or
Oh, who was it, Spencer, on the last 13F
uh,
filing there? And
um,
it popped like $2.50 on it, which
It
seems so
was.
ridiculous.
it was
Yep, it was
Peltz.
Peltz.
It
It
was
was Peltz.
Peltz.
Good job.
Yep,
Good
it was
job, Joel.
Yeah.
Nelson
And
Peltz.
obviously it's come back down here now, so I got the big pop. It was trading up in the pre-market that day. I think it up to like $93, $94. Never even got over 92. So it's people late to the party. When you're trading out those 13, it's such a difficult trade because you're getting the information so much later. Just like, the Warren Buffett example with Apple was, the best 13F says Warren Buffett bought more Apple. And then he comes on CNBC. Yeah, I bought it a month ago, though, when the stock was 115 or 110, and the stock's 135 here now. He's like, I wouldn't be buying up here. So you're chasing always, because you're late to the party. You're getting that information sometimes 45 days later. So here we are, Procter Gamble's back to where it was when that, was disclosed, obviously, on the big gap update. But still, I don't know. If it starts to get into that gap, we call it the Peltz gap, and starts to take out 89, 81, it gets concerning. But this is just trading with other value stocks here now, too. So you got to see what other stocks are trading and that are similar.
Plus, being this, the interest rate sensitive stock too. Let's reclaim 90. That's my area of interest. 989.89 was the low on Friday. Bounced to close at 90.50. So I'd like to see this. I could easily fill the gap there, only 4 cents away. But let's see if you can get back in the 90 handle. And you're talking about the 13Fs, Dennis. I mean, what did we talk about? Warren, and I did that video. Was that like 3 weeks ago or a month ago? Barron's put it in that in part of their review and preview about his increasing his stake and how it was done before earnings, and just kind of old news, but we try
Yeah.
to get it to you as soon as it happens here in Benzinga's pre-market prep. TGTX, that was our morning mover. Went off the board at 535. Have we got any follow through the pre-market high? Oh, getting close here. Bumped up. 960 is a level to keep an eye on. Dennis,
I want to touch on a couple more ratings
Sure.
here, just jumping back because there's some big ones here this morning. Netflix is catching an upgrade from UBS to buy. Netflix has been kind of quiet here for the last month. It's been trading basically between 140 and 145. It was looking weak and looking like it was getting ready to fall off a cliff on Friday, but now you get the relief pop here from the upgrade. Not sure I'm jumping in and chasing it here, though. So much overhead supply, probably up in that 145 area, so you start to analyze it from risk return. Just not sure it's there. Also, obviously, valuation has always been an issue for me on Netflix here. I've always been scared of the valuation on this one, but I've been wrong on this one for a long time because I thought it was overvalued when the stock was 100. I thought it was overvalued when it was 80, and it's 140 now. So I've been wrong on for a long time from a valuation perspective on Netflix, but catching the upgrade here at UBS this morning.
I'll go a little bit shorter term here, 42.35. That was your pre-market high. Your two-day high comes in just above that at 42.70. So let me see if it gets up to 142.50. Let's see if it can even take out that resistance. Some people probably caught in this little slide from 145.
Also, that price target of 175 on that UBS rating of Netflix.
It's a big one.
Yeah.
Alcoa also upgraded to buy at Goldman Sachs this morning. Alcoa trading up 30 cents in the pre-market here. Interesting setup here, Joel. The little triple bottom from the last 3 days.
Yep, and so you got a swing trade. You got a support area to lean on. I know the stock has had a nice run here. Boy, just under 36. Just keep an eye on that. Pre-market high in Alcoa, just over $37, just under 37.20. What was your high from yesterday in Alcoa? Your high from yesterday, right there at 36.89. 37 is the level I'm looking at here in Alcoa.
And one other one was TWX got downgraded at UBS this morning. And this one's interesting too, just because obviously the merger's on the table. But just quietly, stock has come up so far. You start to analyze and you think risk return here now. If you're trading this from a risk arbitrage perspective, I think the takeout is, well, it moves with AT&T, so we can't say a specific takeout price. As AT&T moves higher, obviously TWX takeout price moves higher too. And if you do look at the charts, they do look similar. So obviously it is trading off of AT&T to a certain extent. I just think the wild card here is Trump. And not to get into Trump talk, but, he's talked before, even before he was elected, that he wasn't loving the idea of the Time Warner T merger. And if he was to come out and tweet something or to say something, I think he did do that before, it's just mentioned in passing that he might be sniffing or he might be thinking about, trying to block that merger. Stock could get hit pretty hard. So I'm scared to buy it up here for the simple reason that, there's a Trump factor in here and he might just tweet something and knock the stock down 5%.
Yep, and then the only other notable rating I saw was DuPont upgraded at Jefferies. So
upgraded to buy DuPont and Dow.
Also,
which they're in a merger too.
Yes. I forgot to bring this up at the top of the show. Do you guys know what today is? Or I should say, what happened today in 2009? Do you know?
The market bottom.
Yep. Well, you're on mute, so no one can hear that. But yeah, Joel got it right. The market bottom. The market bottom in the financial crisis.
That was the 666 bottom?
That was the 665.75 bottom.
I round to 666 because it sounds scary.
It does sound scary. You're right.
And it's my nephew's 12th birthday. Happy birthday, Hayden. I hope your dad let you stay home from school.
Okay. All right. That's it for us today. Hope you enjoyed the show. Tomorrow we got two guests for you, Nick Shaheen and then Mike Vienne. He is the CEO of a site called Vetter. They do crowdsourced analyst ratings. If that's your thing, you may very much like to hear what he has to say. Hope you enjoyed today's show and our chat with Tommy. You can catch the whole thing again on our podcast on iTunes, SoundCloud, and Stitcher. Just search for PreMarket. Please remember that all the information, material, and content is for informational purposes only and not meant to be investing advice. Have a good one, everyone, and we'll be back with you folks tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.